And welcome to Capital Market Live on Channels Television. I'm Ladi Williams. And a lot has happened in the week in global markets and right here in Nigeria. But first off, let's take a look at what happened in the global equities market. Now, we'll see the European stocks market close higher, with stocks 600 logging gains of 7.05% in the first quarter, despite a volatile few weeks of trade in the banking sector. Markets in the Asia-Pacific traded higher on Friday as technology stocks continue to see renewed interest, led by gains on Wall Street, with some shaking off concerns of a further banking crisis. Stocks rose Friday as Wall Street wrapped up a volatile but winning quarter that saw more Federal Reserve rates tightening and a mini financial panic spurred on by collapse of Silicon Valley Bank. Well, as I said, a lot did happen. For analysis now, we have Ogenere Ojugo, equity analyst, join me from London. Great to have you on the show.
Great to be here again.
So yeah, Q1. I'm doing great. Just that a lot of traffic right here, but it's been an eventful first quarter in most of these markets. And looking at how the U.S. markets have performed, we've seen the bank collapses, rate hikes. How would you rate U.S. stock performance in Q1?
Well, just looking at the charts, we can see that all major U.S. stock indices are up in the quarter. So we see that the S&P 500 is up about 7% year to date. You see NASDAQ and Dow Jones up. So that's a good sign. But when you widen the chart and then you look 6 months, the stocks are still up. But you look 1 year ago relative to where we were in April, we see that the stocks are down. And this is really just reflective of where we were 6 months ago and where we are today. So there was a lot of concern and fear about where inflation is going to go, how restrictive the Federal Reserve is going to be on interest rates. And a lot of that fear is starting to get some resolution. Now we're starting to get some certainty from the Fed, even though there is still a lot of uncertainty. We're getting a bit more certainty at this time. So the stocks are beginning to see some recovery.
Quite interesting. But what are you expecting for Q2? More headwinds or maybe a mix of headwinds and tailwinds in the global equities market?
Yeah, at this point, it's quite, unbecoming to have any expectations because anything can literally happen. Like at the start of March, if you had told anyone that the banks were going to be the top of the news, no one would have believed that this would be the case, but that's simply what happened. So just to have expectations for what we want to see, we're going to be seeing GDP reports, and that's going to give us or get us start talking about recession, because if economies start reporting GDP decline, then we start having conversations about, okay, so next quarter, that means if we see another GDP decline, then we're in a recession, or a technical recession as they would like to describe it. So we'll start having those conversations about GDP, about inflation. We still need to talk about inflation. Will inflation come down to something around 4% in developed markets, or does that start to see the no landing scenario that we're talking about the last time I was on the show? And then we'll also talk about unemployment, and we'll see issues about interest rates. So the next quarter, we're going to be watching out for a lot of these things, and we'll see where we get to from there.
We definitely would. Is a wait and see at this point. Thank you so much, Ogenere Ojugo, equity analyst. Thank you for your perspective today. Thank you.
Thank you.
All right, so back here, you see the stock market closed for the first quarter on Friday, March 31st. The all-share index of Nigerian exchange returned 5.81% to investors, consolidating gains made from the previous year. Join us now is Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, and President, Capital Market Academics of Nigeria. Great to have you on the show.
Thanks so much, Ladi. It's my pleasure.
Yeah, so good evening, Prof. So just like, the global equities market, right here too, we saw obviously the NGX had a lot to deal with, the local bourse. You see Q1, it's over now. We had Naira redesign, which led to cash crunch, inflation hitting new high, but it looks like the local bourse weathered the storm. What do you think?
Oh, yes, the local bourse weathered the storm. At least, at the nominal level, 5.82% appreciation is quite impressive, relatively speaking. I say relatively speaking because if you compare that with what obtains in emerging economies as measured by the Morgan Stanley Capital International Index for emerging economies, where we find that for the first quarter of 2023, the market on the average, has been in the red. As a matter of fact, in the negative territory. Even for Morgan Stanley, the MSCI World, the one that tracks, the index of 23 developed economies, you also find that we witnessed an appreciation of less than 1%. So here we are talking about 5.82%. So I think that's quite remarkable, and that's not surprising if you also take into consideration the fact that our equities market was among the best for 2022, posting as much as 20%, 19.98%. So I think it's a carryover from the positive sentiments we saw, particularly towards the end of last year, and of course on the back of favorable corporate earnings. Listed companies, a number of them have released relatively impressive results. So I think that's what is driving the market now, despite the fact that inflation rate, the trajectory has been up. That's why I talked about nominal, because the real rate of return is actually negative. If inflation is at 21.91% and the market is returning 5.82, the real rate of return is still negative. But nominally, that's quite a commendable performance.
But Prof, what if we did have those, headwinds in the first quarter of 2023? Do you think the market would have done much better than what we have today?
Oh yes, of course. Investment decisions take into consideration the, inflation, interest rate environment, and of course you notice that the hawkish monetary policy stance, hasn't helped matters with respect to the equities market as we speak. Interest rates are beginning to rise. In January, the MPC increased the monetary policy rate by 100 basis points. We saw what happened, recently when they also hiked it by 50 basis points. So you now notice that in the fixed income market, interest rates are beginning to rise. Just the other day, the Nigerian Treasury bills, was sold at the 364-day Treasury bill, selling as high as 14.7%. So the rising interest rates, the rising inflation, of course, impacts negatively on the equity segment of the market. So that may have also helped to depress, share prices. As I said, on balance, we still had this positive performance on account of corporate earnings. And I think that going into the next quarter, the macroeconomic environment will largely shape the performance of the equity segment of our markets.
Now, we'll definitely be looking out. Still early days for the second quarter. But, looking at the first quarter now, what stocks, stood out for you in the market?
Okay, if you look at the exchange market performance reports, yes, well, the all-share index is the average way that we know that. But we also have some indexes that outperformed the market, as it were, the all-share index. Talking about the oil and gas, the oil and gas index, posted over 10% return. The banking index, printed at about 8.5%, return. And of course, the premium index, where you have the likes of Dangote Cement, the MTNs, also posted impressive, return. So overall, these, sectors outperformed the, average, the market, as it were. Stocks like Geregu, for example, Geregu, selling at over 300 naira today. Airtel at over 1,400 naira. And I know at some point Airtel, which of course is the most expensive stock. So the likes of Airtel, the likes of Geregu, the likes of Okomo, have done relatively well. So in terms of return, they have posted well above market average. So they have outperformed, or as we say in finance balance, these are stocks that actually beat the market.
And undoubtedly, we're talking about Geregu now. We know it did list about 110 naira late last year, and obviously, I don't know if anyone expected to do this well, in this quarter. But looking at where Geregu price is, right now, what are you expecting, going forward? Because I know some investors, biting themselves for not buying, at that price.
Yes, ultimately the performance of the market will depend on the performance of the company, going forward. But a lot of expectations, positive expectations on the part of investors in relation to the Geregu stock. And again, looking at the prospects, some people see a lot of prospects, in the power sector. So these are, in my view, the factors that are fueling the demand for Geregu. And just last week, or this week rather, today is Saturday, we also saw what happened to Oando. Oando opened at 4 naira 25 kobo and is closing at 5 naira 70 kobo. So if you ask me what is driving that, of course, is the recent arrangement, the scheme of arrangement that is taking place now in relation to Oando. As you know, a majority shareholder, is trying to buy over the minority interest in Oando, and is offering a premium. At the time, the share price was less than 5 naira. The majority shareholder, is offering to pay 7 naira 7 kobo. So it is that premium that is, driving the share price movement of Oando now as we speak. Of course, if you look at the Oando, the 52-week history of Oando, the highest it has done the last 52 weeks has been 7 naira 8 kobo. So for a major investor to be offering 7 naira 7 kobo, that's quite an incentive, and that's the motivation for what you now find happening around the Oando stock. Of course, as soon as that scheme of arrangement is completed, the Oando will eventually be delisted from the exchange and will become a private company, as it were.
Yeah, quite a premium they're paying for that at this time. But after the break, we'll continue the conversation. We're looking at some full-year earnings for 2022. Do stay with us. We'll be back after the break with Professor Uche Waleke. Do stay with us. Welcome back. Still watching Capital Market live on Channels Television. I will still have with us Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, and President, Capital Market Academics of Nigeria. Thank you for staying on, Professor.
Thanks, Ladi.
So earlier this week, we did see the Senate pass the Investment and Securities Bill. Quite a big one there after the House of Reps, passed it last year. But what happens now, and how would this impact Nigeria's capital market?
It's a welcome development. The Investment and Securities Bill is actually meant to replace the ISA, Investment and Securities Act of 2007. You can imagine, since 2007, we've not had, a revision or an amendment to that act. Recall that the first one was actually in 1999, 8 years after. There was an amendment, 2007, and now nearly 16 years after, we haven't had one, despite the developments in a market that is very dynamic. Okay, before now, well before now, Ladi, the market was just about the traditional products, ordinary shares and bonds. Today, the menu of asset classes, has expanded. We have exchange-traded products. We have even derivatives, in the market. A number of platforms, have also now come up. It's no longer just the Nigerian exchange. We have FMDQ, we have NAST. Okay, we also have commodity exchanges. So there has been a lot of developments. Not forgetting the developments, around market infrastructure. So, and that's why there is need to actually amend the ISA 2007, and also to strengthen the regulatory function of the Securities and Exchange Commission. So what this ISB has done now is to address, some of these issues and to provide, if you like, a platform for a holistic, regulation of the market. The ISB, I understand, has a separate part for commodity exchanges and the warehouse receipts. There is also a part that talks about, Ponzi schemes, pyramid schemes, imposing stiff penalties for operators who engage in Ponzi schemes. As a matter of fact, not less than a 10-year jail term for operators of Ponzi schemes. And another interesting thing it has done is to also include the PENCOM, as a board member of the Securities and Exchange Commission. Now, the significance of that is that it will encourage, pension funds, of course, regulated by PENCOM, to invest more in the capital market and, encourage collaboration between the SEC and PENCOM. As part of the revised capital market master plan, 2021 to 2025, there is the target of ensuring that, pension fund investment in the capital market increase from the current 2 trillion naira to about 7 trillion naira. And I think that will be enhanced, by what has just happened when you have PENCOM also on the board of the SEC. Another interesting thing too is that it has categorized the securities exchanges into two. You have composite exchanges, those that are allowed to trade and list, several securities and products, and then the singular, the non-composite, dealing with just one product. Okay, issues around fintech, issues around crowdfunding, for example, has also received attention. So to me, overall, it's one bill that is meant to, further deepen the market, enhance regulation, investor protection, particularly against the backdrop of the Capital Market Master Plan, implementation.
And talking about, Ponzi schemes at this time, you said there are going to be stiff penalties for, operators of these schemes. But, do you think it's going to do anything to dissuade, Nigerians from actually, going after these schemes?
Okay, the thing about Ponzi schemes also has to do with, sensitization, creating awareness, which, of course, is what the Securities and Exchange Commission, has been doing for a while. SEC is actually on top of it. In recent times, a lot of sensitization has been going on. So people need to understand, and I say that anytime I have, of course, I teach investments, I teach finance. I get the opportunity. I let people know that investments, of course, involve risk and return. So when people come and tell you, about a mouth-watering return of 30% monthly or even per annum in an economy where the average return, is about around 15%, of course, you should, if you like, to use the Nigerian balance, you should shine your eyes. So it's all about return and risk. So the public, need to know that, Ponzi schemes are not in their interest, that these are very risky investments. As a matter of fact, I don't even see them as investments. That they are more like gambling. And that's why the Securities and Exchange Commission, has been really frowning at operators of Ponzi schemes. And I'm aware that a number of them, are being prosecuted. A number of them, are being sanctioned, by the commission. So it's about sensitization, followed, in conjunction with the enforcement of these penalties. And this new bill has also given SEC a lot of powers to enforce, some of these, sanctions. And I think it will go a long way to reduce the rates at which these Ponzi schemes, proliferate.
Definitely very, very risky schemes at this point. But Prof, before I let you go now, let's look at, we've got a flurry of, full-year audited earnings for 2022. Tell me which companies, stood out for you, looking at the results.
Okay, yeah. What I usually do is, first, I can only give you now a bird's eye view. Of course, with time, after doing a deep dive on them, one can come up with, an analysis of how they performed. But a cursory look at these performances, single out companies like UBA. UBA's performance for the year ended December 31st, 2022 was quite impressive relative to 2021. Earnings grew by over 40%. That's earnings, that's profit after tax. Shareholders' funds also grew. Assets, the asset base equally showed improvement. And overall, of course, UBA is paying 90 kobo, has proposed 90 kobo dividend per share. Earlier on, it had paid 20 kobo, if you recall. So bringing the total dividend to 1 naira 10 kobo. Ditto for Zenith. Zenith Bank too is, if you're under corporate action, Zenith Bank is doing dividend of, I think, 2 naira 90 kobo. And there are also others. Cadbury, 40 kobo. Transcore, 5 kobo. May and Baker, 30 kobo. And Okomu is doing as much as 12 naira, per share, by way of dividends. So remember that returns from the markets comprise not just share appreciation, but also dividends. So investors are also looking at these dividends. And that's also why between now and the time some of these companies close their register, I think Zenith's qualification date is 14th April. You should expect that a number of investors will show interest in some of these companies. Zenith Bank today is 25 naira, per share. I think UBA, I think about 8 naira or so. So I am saying that these performances will surely, boost their share prices.
All right.
Ultimately. So overall, I would say that many of these companies, relative to 2021, have actually done well. And particularly for UBA, one thing that caught my interest in that of UBA has to do with the cost-to-revenue ratio, cost-to-income ratio. Cost-of-income ratio of UBA actually dropped. And that speaks to, the level of efficiency in that company, how it is managed. Okay. So it's not just looking at the these other, when you also look at the cost side and see what is happening, that gives you, puts you in a position to have an informed view. So overall, whether you're doing horizontal analysis or you're doing common size analysis or even trend analysis, ratio analysis, in respect of these companies, what you will not fail to see is that there has been an improvement with respect to many of these companies. And that is what is responsible for the performance you find in the equities market, despite economic headwinds, macroeconomic headwinds.
Definitely, it's been a very tough first quarter, and we're definitely looking out for how this companies perform in the first quarter of 2023 and going into the second quarter, and definitely more earnings we're expecting, from other companies have not released theirs, and we're looking out for all of that. Thank you so much, Professor Uche Waleke, Professor of Capital Market, Nasarawa State University, and President, Capital Market Academics of Nigeria. Thank you so much for your perspective today.
Thank you, Ladi, for inviting me.
Thank you. All right, so that's it on this weekend show, Capital Market, right here on Channels Television. I'm Ladi Williams. I'll see you next time.